My philosophy on this, whether you have an IRA and you're coming back to Canada or an RSP going to the U.S., is from a planning point of view, is keep your options open as long as you possibly can, right? You know, if you don't have to cash in your RSP, don't.
Yep. Well, there's nothing wrong with keeping. We have these two strong economies, and there's nothing wrong with keeping part of your assets, 30%, 50%, some part of it, in the other country. Because if one goes down, the other one's likely going to stay up unless we both go down, in which case it doesn't matter anyway.
Well, let me go further on that, in that it is possible, and in our practice we have the ability basically to access any investment in Canada, stocks, bonds, funds, currencies, the same in the States, and investment vehicles. You can, and it would have been a wise strategy some years ago for an American to Canadianize his IRA.
Tell me about it. I mean, look at all the guys. Remember, in 2000, every financial planner in Canada, but about two, were all saying, get some American stock. They were all yelling because an RRSP was limited to 20% or 10% Canadian or foreign content.
Right.
So they raised it, and people went out and threw all their American stocks and watched the whole thing go down, where if they stayed Canadian, they would have done 30% better.
Absolutely. So what happened is, just before we go on to that, is in an IRA or an RSP, there are no foreign content restrictions anymore. You can own whatever you want in a qualified investment in an IRA or an RSP. But you can Canadianize it. A good example, I mean, going back over that bull market period, for the same, an American who invested in a Canadian index fund over the same time period
Did 30% better.
he did almost 2 times as good.
2 times better. 100%.
Double, 100% better than the S&P index. Equivalent. So if you just took the Canadian stock index versus the S&P and you Canadianized it, you doubled your returns over that time period. I talked about the currency because of this change in the U.S. government in terms of printing all this money, and the possibilities of the American dollar now starting to, as we all know with his money, that the American dollar...
I think we're going back to par, but that's beside the point.
Yeah, declining in value versus every currency. So if the Canadian dollar is going back to par, that's almost a 22-24%
increase
in your returns on top of any investment you make, whether they're bonds or stocks, if you're an American buying Canada. Can you Canadianize an IRA?
You can.
Yes, you can. We have the ability to put a variety of different investment instruments in an IRA, which will replicate performance in Canada. You know, you can have currency ETFs. You can use investments that Canadian stocks listed on a U.S. exchange, for example, things like that. There are different ways to...
Well, we used to buy Seagrams to get some foreign content.
Sure.
Right?
Sure. I mean, even American stock strategies, for example, there was a great article in Barron's on Avon, you know, the beauty.
Yes.
Avon gets 60% of their revenues ex-USA, and their largest sales force is I think they have 3,000 salespeople in China, growing at 25% a year. But currency has a very big impact on Avon's earnings. So, as most like Pepsi-Cola and so forth, world-class companies. So, but you can tilt a portfolio within an IRA to take advantage of these kinds of things to get the currency working for you, even though you're an American.
Well, one of the things that's interesting is that you can take an IRA and roll it into an RRSP. Takes a little bit of shuffling, and it doesn't work if you don't have a job. But just for the record, if you had $100,000 in your IRA and you wanted to roll it into an RRSP, you could cash in, for the sake of argument, $20,000 this year, pay the U.S. tax on it and pay the penalty, bring the money into Canada, roll it into an RRSP by adding the amount of tax that you paid back into it. You have rolled it into an RRSP, but you also have to report it as taxable income. So you report as taxable income, you get the RSP deduction because it's a rollover, and you pick up the foreign tax credit for the tax you pay to the States. So you have effectively rolled it into an RSP. You've just about dollar for dollar, penny for penny. And it could be a good strategy if all your money was in the States, and we're talking about the Canadian dollar becoming worth more. It might be the time to do some of that rolling right now.
You could do it that way. Sure, you could. I mean, that's one way to tackle it. I mean, if you were had, again though, if you were permanently coming into Canada and staying here and you weren't ever thinking about going back to the United States, there's no reason to keep an IRA active then, and you had the income in Canada to use.
Yeah, you have to have taxable income in Canada to do the rollover. It doesn't. The fact that the Canadian government allows the rollover is offset by the fact that the U.S. government doesn't. The U.S. company won't recognize it as a rollover. Once in a while, we've had a couple. I won't bother naming them, but we've said, well, here's the law. It says you can roll it over, so the guy will send the money out without the tax deductor. So then you got it as a rollover. But most of the time they want to hold the money, and it doesn't matter how you argue it, they are going to hold the money.
Yeah. But in any event, you can go either way. You have a choice. You can either, if you're not going back and you have no intention of going back, you can use the maneuver you just described by taking your IRA and converting it, rolling it through to an RSP. But, I mean, if you decide that you may go back to the U.S. or for whatever reason you want to keep a U.S. account, we can do that. And if you're worried about the American dollar declining substantially over the near term or the longer term even, you can invest that IRA to take advantage of the Canadian currency.
Sure, you could sell out some of the things you've got in it now and buy Canadian items.
Sure.
Which would have exactly the same effect.
Yeah. So you could Canadianize the investments within the IRA program. And so you have choice.
At the same time, you could buy some euros and so on. You could buy
euros.
Whatever you want to do.
We have the ability in an IRA to buy euros, euro-based euro ETFs. You can have a gold or silver. You have a proportion of precious metals if you wish. You can have Canadian dollar currency in the IRA itself, and if you wanted to spread it around, you could have euro, Canadian. You could have Japanese yen if you wished. But nowadays, there's just a large amount of investment opportunities. There's not much. I guess there's so much available you can do, but most people, like say when they come with these 401ks and IRAs, are basically been invested in mutual funds, and the bigger world has not been available to them before. So.
Yeah. And that's what you can do.
That's what we do.
All right. So the name of the company is Seabank Capital. You can find them on 152nd.
We're actually in White Rock, British Columbia, right on the border, Washington, D.C. border.
152nd Street?
152nd, yeah.
And the phone number is 866-541-9952.
9952, yeah.
1-866-541-9952. If you happen to be in the Lower Mainland, you don't have to dial the long distance number either, because you've got the number is clear. It's 604. 541-9952. Sort of the same thing we've got here. And if you do, I see, Mitchell, you've got it up on the screen. This is wonderful. Then I see that Paul has arrived, and how much more time have we got here?
7 minutes. 7 minutes.
Another 7 minutes before we're going to bring Paul in. So let's go back over this again. We just dealt with the person that's moving from the States back to Canada. As I said, I had 3 of those. I've had 100 of those since Christmas. I've had 2 now, moving from here back to the States.
Right.
So the Canadians are getting laid off in the States, just right, left, and center, and not that many Americans that are in Canada being laid off and going back. But I should send you a copy of one letter I got, because it's just he calls himself, 2 of them, they call themselves so lucky to have sold their house and only lost $180,000 on them in Canada.
Yeah.
And going back because of the collapse of the market, and of course the last night's news, as we just talked about, just condominiums at the Beasley, just right beside the Vancouver Public Library, dropped the price $150,000 to $195,000 each, just like that.
Pretty thought.